From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 29th, 2016. I hope you had a great weekend and are ready to get started with trading for this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Now, we have a relatively slow news calendar for the beginning of this week. Of course, it's a UK bank holiday today, but it becomes much more active as we get into Wednesday, Thursday, and Friday of this week, and you'll want to make note of that on your financial calendars for the latest releases. Let's go ahead and start right here into the USDCHF, the US dollar versus the Swiss franc. Starting here on the daily time frame, something important to remember is we've been studying this long-term downtrend channel, this red trend line at the top and the bottom. If I zoom out to the weekly time frame, you can really get a sense of that channel there between the two red trend lines. We've approached the top of this many times. Take a look over the past several months. We have challenged the top of this channel for many times, many weeks here on the weekly time frame. And here we are once again this week with last week's rally, this week pressuring back above that red trend line. The question is, are we going to actually break it now? Or is this just another false attempt and we look for the market to go lower? So we'll keep eyes for clues for that over the next several days. Take it on back down to the daily time frame. You can see where the red trend line is. You can see the attempts over the past several months to try and break through it over here, and the bearish market taking hold and driving it lower here, an attempt to get back above here, driving it lower. So it's an interesting aspect to the market, but I definitely don't want to rely on that as our overall trading aspect. I do think that the most recent bullish price action we've seen for the US dollar is very interesting, and I'm looking for clues that this could be a sustainable move. First off, we are above that red trend line, so that's interesting. We're above the bearish blue trend line. That's another interesting aspect. And also the 100 period moving average. We're now back above that for the day today. We don't yet see the Forex Black Book changing over to green from red, from bearish where it was last week yet, but it is interesting that we see the rise. And I think if the economy, let's say non-farm this week, becomes good news for the U.S. economy as well, that could bolster those interest rate expectations over the next couple of months that Fed Chair Yellen was speaking about last week. So definitely watching for that. So if we're going to buy this currency pair, we always want to buy on dips into support or breaks of resistance. So we would actually like to see it come on back down towards the yellow shaded area, 97.55, 97.35 before we were looking to buy it. Doesn't make much sense to buy it into the orange zone. That's currently our resistance. That is 97.90 up to 98.10. That's our current resistance. So we will need, if we're going to buy it, it either goes back down to the yellow zone or breaks above this orange shaded area. It needs to get above that 9,800 level if we're going to go long and buy the US franc, targeting the purple zone or higher levels from there. On the other side of this, if you're considering going short because of the rally and we need some further indication, I think, of reversal. Take a look at some of the historical times where it had a significant rally. Here on the very left-hand side chart, rally. Several days found resistance inside the blue circle before dipping back lower again. Here it took a rally 3 or 4 days before taking a dip again. So don't get too antsy today to try and go short unless you see evidence of resistance and reversal. Take it down to the 4-hour time frame. Doesn't change any of that. We just get a little bit of a zoomed in view. Interesting enough, Fibonacci from the high down to the low here on the left hand side puts the 886 right at the top of the orange zone. But I definitely think that we're looking for longs right now. I don't think we look to go short. There's no evidence of going short, no evidence that the sellers are going to take back control. So at this point, it either needs to dip to the yellow zone or break above this orange zone before we look for a long opportunity for the US franc. Taking over to the euro dollar, EUR USD, just the opposite. Of course, we've been studying the green trend line, the downtrend, but over the past couple of weeks it has been an uptrend. Let's go ahead and zoom it in here on the daily time frame. We were stuck in this black box here, broke underneath the black box. If you took a sell last week and were able to hold through that volatility we had on Friday, maybe you were able to stay with it. We're now underneath the 100 period moving average and into the support, the pink shaded area. Again, similar to the franc, you don't really want to go short into support, or long into resistance on the franc, but short here into support. What we need to see is a breakdown of that support. We need it to get underneath there before we have an opportunity to go short. Otherwise, rallying back into resistance. Let's zoom it in one more time. Rallying back into resistance, which at this point will be this yellow shaded area now. That now becomes our resistance. Those two opportunities become our short opportunities for the euro. And of course, we'd look to target at least first down to the green zone, if not even deeper levels from there. Don't really see any evidence of buying pressure yet, so no real reason to go long or buy the currency pair. But definitely a clear area to watch for here into the pink zone today. Let's go ahead and zoom it down to the 4-hour time frame, get a better view of that. Look at the support there. Again, I don't think you want to go short right now until we satisfactorily break through. We'll call this 111.60 to 111.80 is the pink shaded area. We need a satisfactory break of that before we have higher expectations going down to the green zone. Because suddenly and instantly this could reverse and go back up to the yellow zone. So watch for the breakout down to the green zone. Otherwise, waiting for it to either rally back to the yellow zone, break the pink zone to go down, and watching for clues and evidence that maybe the buyers become more interested in this currency pair to drive it back higher again for the euro dollar this week. Take it over to the GBP USD. A little bit of a shift in momentum again here for this currency pair as well. Over the past couple of weeks, we've been seeing a rise here. We have a long-term range. Since Brexit news, by the way, on the left-hand side of the chart, the big red candle, we have been stuck inside this black box, and we've been studying that in the live trade room. I told you last week that I would be very discouraged about going long and buying this currency pair at the top of that range. And that proved fruitful for last week because now we see it falling back down into the mid part of the range. Let's go ahead and take it on down to the 4-hour time frame. You can really get a sense of what's been happening over the past several days. You see that rally right here, the uptrend here last week. We saw Fed Chair Yellen speaking, giving some comments, causing this to get volatile, and then finally we see it going down. We're underneath the blue zone. We broke underneath the blue zone now. You can see that right here. Now we're challenging into support again. I don't think this is a good place to go short into support. It will need to break that support if you're looking to go short again. So I would never suggest going short into a support level, at a low point of the market. I always want, if I'm looking for low risk and high reward, to go short into resistance or under support. So it needs to break through the yellow zone before I consider going short towards the 1.3 thousand level, which of course is closer towards this purple shaded area. Let me see if I can get that selected, and I'll draw this back down. It's about right about there. So we're looking 1.3010 to 2990 is this purple shaded area. So if it can get through the yellow zone, that becomes your next support. But I think it needs to get through there first before that becomes a viable opportunity here on the GBP USD. Take it over to the USDCAD. We see a little bit of shift in momentum on this currency pair as well. While over here it was a downtrend going down. Last week we saw it finding resistance into the blue shaded area. 1, 2, 3, 4 days finding resistance there. Dipping to the orange zone on comments made by the Fed chair. And then rallying back higher now into the 1.3 thousands. 3015 to 50 is the pink shaded area. And you can see the market challenging that today. That's just underneath that blue trend line. We're back above the 100 period moving average as well. Again, all these currency pairs so far have been moving now against the Forex Black Book trend indicator. Right now you can see it being red and bearish, but the market's moving up. So could we be in the cusp of trend change, the momentum change, especially with the comments from the Fed chair last week? We could be in the cusp of momentum and sentiment change for the US dollar. We'll have to continue to watch for further evidence and signs of that as we go along. Let's go ahead and zoom it on down to the 4-hour time frame. Now, if we're going to buy this currency pair again, I don't think you're at the very best opportunity to buy it. Buying into resistance, to me, just never makes a good deal of sense. I would prefer it to take a dip lower into support or break through that resistance before we'd look for an opportunity to go long. So breakout scenarios abound so far on each currency pair that we've talked about. It needs to break the pink zone or dip back to the blue zone before you buy it. There's no evidence of reversal, no evidence that the sellers are taking control yet. Keep an eye on those oil prices as well. That could dictate some direction as well on the US CAD. Over here on the US yen, quite a dramatic change here for this currency pair. We've been studying the downtrend, the black trend line here on this currency pair for several weeks, looking for opportunities to go short in the direction of the long-term trend. Now we can see a change in that price action. It broke back above the triangle, the black box, and now has made a dramatic move all the way back up to the 102 level. So once again, if we're seeing sentiment and momentum or trend change here, we're going to need to see some further evidence other than just this one single push higher. We've seen pushes higher over here on the left-hand side where the market was temporary push higher and then turned back down and made new lows. So we need to see some further evidence, higher highs, higher lows. We need to see some indicators, some price action, charting patterns, maybe an inverted head and shoulders or something like that, or just a break of a high. I think this high over here on the left-hand side around 102.50 would be a significant break, and we might look for a continuation higher. Let's take it down to the 4-hour time frame. Again, I would never suggest buying at the highest peak high of any move. So, two things that need to happen here if we're going to go long on the US yen. Obviously, the first thing that we might look for would be a dip back down to support, which would be back down here to the pink shaded area, 101.50 to 101.75. That would be our first opportunity on a dip and then a new rally. The next opportunity, of course, is finding resistance here at the yellow shaded area. We need to break the yellow shaded area. So several hours now finding resistance here into 102.20 to 102.50. It needs to break through there if we're going to see this continue to pressure higher for the US yen. Moving over to the AUD USD, again, shift in direction, sentiment, momentum maybe taking place here. Here's something interesting that we've studied a few times in the trade room, is this long-term red trend line. Take a look at that. Long-term trend has been down for many, many months, actually a couple of years now. We're looking all the way back into 2013, end of 2012 at the top left-hand side of the chart. So it's been a long-term downtrend. Over the past few weeks, we've watched the market attempt to break that and been unable to. So the question is it now returning back in the direction of the longer-term trend? Daily time frame could suggest that since we've found resistance. Let's go ahead and zoom it in one more time. There's that red trend line. We found a lot of resistance there inside the red box, and now we're starting to see a breakdown of the green trend line. So could we be seeing evidence of reversal? Possibly. We don't see that signified in the Forex Black Book trend bar yet, but very interesting things to watch there for the Australian dollar. Zoom it in here like this. Last week we studied the market bouncing around between the pink and the blue zone quite a bit. We finally are pushing underneath the pink zone, so we need it to stay underneath there. If we're going to go short, a rally back into the pink zone or a break under the yellow zone become our next opportunities here if we're going short. It might even be a rally back into the blue zone up here, by the way. So don't get too caught up in the pink zone if it breaks through there. Let's see. If it breaks above the blue zone, of course, I do, like I said, think it would go back up to the blue shaded area. So going short, if you're going to go short under the yellow zone, back into the pink or the blue zone. If you're looking to go long, I think you need evidence of reversal, and you don't have that yet. Sellers are in control, and no reason to believe that they're going to give up that control anytime soon. So definitely watching for resistance now into the pink shaded area. 4-hour time frame doesn't change it at all. You can see the support at the yellow zone. Don't go short on top of the yellow shaded area, either back to the pink zone or under the yellow zone. We're going short on the Australian dollar. If you're looking to go long, at least your lowest risk, highest reward opportunity to do that is at the yellow shaded area. Watch for clues to reversal from there for the Australian dollar. Moving over to the NZD USD, similar situation. We found a lot of resistance at the pink zone over the past couple of days, or several weeks actually. So we're definitely watching for clues and evidence of reversal here as well. Take a look at this black box, top right hand corner of the chart. We've watched this for now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days we've been stuck between the pink and the green zone. No reason to believe that it's going to change until it changes. So what we're going to watch for is one of two things. It either breaks the pink zone, which it attempted to do last week, to go higher, or breaks the green zone to go lower. And that's what we're watching for. We're looking for a breakout of this range before we can really have confidence in an uptrend or a downtrend. Otherwise, the possibility of continuing bouncing around between the pink zone and the green zone is there. I think we're coming to the end of it pretty quickly, but definitely watching for the real deal breakout. I don't want a false breakout like this was. I want a real deal breakout. 4-hour time frame. Look at that. I'm sure a lot of folks were fooled into buying as it pushed through that pink shaded area. But fortunately for us from the trade room last week, we were buying from the green zone. Remember, buy dips into support or breaks of resistance. I don't think you want to buy it today. I think more likely you're looking for the break of the green zone and the continuation lower for the New Zealand dollar today. We'll keep an eye on that. and also watching for buyers to step back in. If it drives it back above 72.50 and the top of the green zone, maybe we are looking for a little bit of reversal again. But at least today, I would say even we can look at this a little different way. We need a breakout of this green zone. You can see clearly support and resistance top and bottom of that green zone. So a breakout above there, 72.50, or a break below 72.20 could give you a clue to the direction for the day on the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.